November of 2034, 99% of all the Bitcoin will have been mined, and the last 1% comes out over the next 100 years.
Bitcoin, it's more than just a currency or a trend. It's a revolution that's disrupting traditional finance and capturing the attention of people worldwide. Since its creation in 2009, Bitcoin has defied expectations, becoming an alternative store of value, a hedge against inflation, and a new way to view money itself. But for some, Bitcoin's current price is just a fraction of what it's destined to be.
The advantages of Bitcoin is it's money of the people, right? It's money for the people. And the combination of the fact that it's permissionless and it's open.
What if Bitcoin could reach $1 million per coin, or even more? To many, this might sound impossible. But one man, Michael Saylor, is convinced that not only is Bitcoin's potential real, it's inevitable. As the CEO of MicroStrategy, Saylor has poured billions of dollars into Bitcoin, backing his belief with massive investments. He isn't just bullish on Bitcoin, he's betting on it being the foundation of a new digital economy. Today, we're going to explore why Michael Saylor believes Bitcoin could be worth $1 million per coin and even hit the unimaginable $10 million mark.
Bitcoin's going to $1 million a coin and then $10 million a coin. I don't think you should be a Bitcoin miner. I don't think you should be a Bitcoin exchange. I don't think you should be a Bitcoin wallet. I don't think you should. I just don't think you should be. You shouldn't be a pure play focused in the business at all, because you're already a loser.
His insights into the future of Bitcoin and the global economy have drawn attention from investors around the world. Let's explore Saylor's journey with Bitcoin, his reasons for such bold predictions, and the fascinating economic principles that drive his vision of Bitcoin as the ultimate asset. The story of Michael Saylor and Bitcoin. Michael Saylor's journey with Bitcoin didn't begin with a fascination for cryptocurrency or blockchain technology.
But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders.
For most of his career, Saylor was focused on business intelligence. MicroStrategy, the company he founded in 1989, became a pioneer in software and analytics, serving thousands of clients globally. But Saylor's priorities shifted dramatically in 2020.
To do with it, but I think everybody can agree they would like more economic power, not less economic power. And the world seems very simple to me. It's like there's $900 trillion of wealth.
In the wake of the COVID-19 pandemic, the global economy faced a crisis like never before. Governments around the world responded with unprecedented fiscal measures, injecting trillions of dollars into their economies. The U.S. Federal Reserve, in particular, printed vast amounts of money to stabilize the economy, which led to record low interest rates and fears of inflation. For Saylor, this was an alarming wake-up call.
So what we did is we demonetized the sovereign debt for the most part, and we rolled into Bitcoin. So I think in the developed world, in Europe and the US, I think that Bitcoin's going to demonetize.
He saw cash reserves and traditional assets facing a grim future as inflation threatened to erode their value. Saylor realized that his company's cash reserves, worth hundreds of millions, could be rapidly losing value if they remained in dollars.
And all the people that believed in Bitcoins for the last decade are going to have the financial wherewithal to create their own companies to do whatever they want.
He began searching for a way to protect MicroStrategy's wealth. Saylor turned his attention to Bitcoin, an asset he initially knew little about. But as he researched Bitcoin's unique properties, he became convinced of its value, calling it digital gold.
Bitcoin mining is like this. It's like your skin. It's the first line of defense of your immune system, right? It's what makes you healthy.
He saw Bitcoin's scarcity as a hedge against inflation, a way to store value in a world where fiat currencies are constantly devalued. In August 2020, Saylor made a bold decision. He announced that MicroStrategy would adopt Bitcoin as its primary reserve asset, converting a significant portion of the company's cash reserves into Bitcoin. This move was historic. It marked the first time a publicly traded company adopted Bitcoin as a primary treasury reserve asset, a decision that sparked conversations across the financial world. To date, MicroStrategy has invested billions of dollars into Bitcoin, a testament to Saylor's unshakable belief in the cryptocurrency.
We've got high performance equity, and then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral.
Saylor's decision to go all in on Bitcoin wasn't just about preserving MicroStrategy's assets, it was about setting a precedent. By making Bitcoin the cornerstone of MicroStrategy's treasury strategy, Saylor hoped to inspire other companies to see the potential in digital assets. And beyond that, he wanted to share his vision of Bitcoin as a means to preserve wealth in a world where traditional currencies lose value every day. Why Bitcoin to $1 million?
The future of digital property, this is digital energy. This is the future of digital money.
So why does Michael Saylor believe Bitcoin could reach $1 million per coin? His reasoning starts with the fundamentals of Bitcoin itself. Bitcoin's value, he argues, is rooted in its scarcity. Unlike traditional currencies, which can be printed in unlimited quantities by governments, Bitcoin has a hard cap of 21 million coins. This limited supply makes Bitcoin an ideal store of value, similar to gold, but with unique digital properties. Saylor points out that in the past century, governments around the world have continuously printed more money to fund various initiatives, from war efforts to social programs to pandemic relief. While these measures may have short-term benefits, they come at a cost: the gradual erosion of purchasing power. Inflation is like a hidden tax, eating away at the value of money stored in cash, savings accounts, and even some traditional assets. Saylor believes that in an inflationary environment, Bitcoin's scarcity becomes a powerful advantage. To Saylor, Bitcoin is a kind of digital gold, but with properties that make it even more effective as a store of value. Whereas gold can be mined and potentially discovered in new quantities, Bitcoin's supply is fixed. Saylor argues that this mathematical scarcity makes Bitcoin a better hedge against inflation than gold. As he sees it, owning Bitcoin is akin to owning a piece of property in cyberspace.
Bitcoin are number one, fair accounting. And we started with indefinite intangible accounting, and we get fair value accounting in January of 2025 that's mandatory.
A scarce and valuable asset that cannot be duplicated or diluted. Saylor also believes that Bitcoin's decentralized nature gives it unique strength. Unlike traditional currencies, which are controlled by governments and central banks, Bitcoin operates on a decentralized network of computers around the world. No single authority can manipulate its supply or influence its value. This decentralization, according to Saylor, makes Bitcoin anti-fragile, a term coined by scholar Nassim Nicholas Taleb to describe systems that become stronger under stress. But Saylor's $1 million prediction doesn't rely on scarcity alone.
So those that say, oh, Bitcoin, it's an asset. It may be digital gold. It's too good to be true. So the government will ban it. Follow me that again. It's really good. It's so good that the government's going to ban it.
He points to a rising wave of institutional interest in Bitcoin as a key driver. In recent years, major corporations like Tesla, Square, and PayPal have entered the Bitcoin market, adding Bitcoin to their balance sheets and allowing users to buy and sell it on their platforms. Saylor believes that as more institutions begin to hold Bitcoin, its demand will rise dramatically, pushing prices upward. According to Saylor, Bitcoin is still in its early days of adoption. He compares Bitcoin today to the internet in the 1990s, a revolutionary technology just beginning to disrupt traditional systems. As people become more familiar with Bitcoin and its potential, he predicts that more institutional investors, corporations, and even governments will begin holding Bitcoin as a hedge, a store of value, and a new form of digital asset. Saylor argues that Bitcoin has the potential to replace gold as the world's preferred store of value. While gold has served this role for centuries, he believes that Bitcoin's digital nature, fixed supply, and ability to be transferred globally at any time make it superior. As more people come to understand Bitcoin's unique properties, he predicts that they will move their wealth into Bitcoin, driving its value higher. From 1 million to 10 million, Saylor's long-term vision. For Michael Saylor, a 1 million Bitcoin is just the beginning. He's hinted at an even more astonishing target, $10 million per coin. How could Bitcoin possibly reach such astronomical heights? Saylor's reasoning hinges on Bitcoin's potential to become a global reserve asset. Saylor argues that if Bitcoin continues to grow in acceptance and stability, it could be used by governments, central banks, and large institutions as a reserve asset. Today, central banks around the world hold vast reserves of US dollars, euros, and other major currencies. But as inflation erodes the value of these currencies, Saylor believes Bitcoin offers an alternative, a decentralized asset that isn't controlled by any government and has a predictable supply. If Bitcoin achieves the status of a global reserve currency, its market capitalization could reach tens of trillions of dollars. Currently, Bitcoin's market cap is around $500 billion to $1 trillion, depending on the price. But gold's market cap, by comparison, is over $10 trillion. If Bitcoin were to capture even a portion of that value, it could easily reach $1 million per coin. And if Bitcoin were to compete with larger asset classes, like bonds or real estate, it could soar to $10 million. Saylor believes that the growing distrust in traditional financial systems only strengthens Bitcoin's case. He points to the economic challenges that have plagued countries worldwide, from hyperinflation in Venezuela to banking crises in Lebanon. In these cases, people have lost faith in their national currencies and turned to Bitcoin as a means of preserving wealth. Saylor envisions a future where Bitcoin is a safe haven for people around the world, offering a way to protect their wealth from unstable financial systems. Institutional adoption and mainstream acceptance. A major factor in Bitcoin's path to $1 million, according to Saylor, is institutional adoption. In recent years, hedge funds, corporations, and high net worth individuals have started to allocate portions of their portfolios to Bitcoin. Companies like Tesla, Square, and MicroStrategy itself have set a new precedent, showing that even billion-dollar corporations see value in holding Bitcoin on their balance sheets. Saylor believes that institutional adoption is still in its early stages. He argues that as more financial institutions recognize Bitcoin's value, we'll see a tidal wave of investment. Saylor has pointed out that the global wealth held in cash, stocks, bonds, and real estate is estimated to be over $400 trillion. If even a small fraction of this wealth flows into Bitcoin, it could push prices to $1 million and beyond. Saylor often compares Bitcoin's current adoption phase to the early days of major technology companies.
Apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really
Isn't it
hard.
supposed to be the opposite?
He draws parallels between Bitcoin today and companies like Amazon or Google during the early internet era. In the beginning, these companies were misunderstood and faced skepticism, but as the internet became essential to our daily lives, their value soared. Similarly, Saylor believes that as Bitcoin becomes widely recognized as a store of value, its price will rise dramatically, just as it did for early internet companies. He calls this process the monetization of Bitcoin, a gradual but inevitable adoption as Bitcoin becomes embedded in global finance. In Saylor's view, institutional investors are especially interested in Bitcoin's potential as an asset that is completely decoupled from traditional financial markets. Stocks, bonds, and even commodities are all tied to macroeconomic factors and government policies. But Bitcoin is independent. It operates on a decentralized network and doesn't rely on the success or stability of any government or financial institution. Saylor argues that this independence makes Bitcoin an essential asset in a diversified portfolio, particularly as concerns about inflation and global debt grow. Saylor's confidence in institutional adoption isn't based solely on financial speculation. He believes Bitcoin has what he calls network effects. As more people and institutions adopt Bitcoin, its value and utility grow exponentially. This principle is similar to how social media platforms like Facebook or Instagram became more valuable as more people use them. In Saylor's view, every new Bitcoin holder strengthens the network and brings it closer to global acceptance. Saylor also emphasizes that Bitcoin's adoption isn't limited to institutions and corporations. He sees it spreading among individuals and small businesses around the world. From small savings accounts to large investment portfolios, people are increasingly looking at Bitcoin as a hedge against the traditional financial system. Saylor believes that this grassroots adoption is just as powerful as institutional interest because it reflects a shift in how individuals view and store their wealth. From volatility to stability, a natural evolution. Despite his bullish outlook, Saylor acknowledges that Bitcoin's journey will not be without challenges. One of the most significant issues Bitcoin faces today is volatility. Bitcoin's price can swing dramatically in a short period, driven by market speculation, regulatory news, or macroeconomic factors. Critics argue that such volatility makes Bitcoin unsuitable as a store of value. But Saylor sees this volatility differently. He describes Bitcoin as being in its price discovery phase. In other words, the market is still trying to determine Bitcoin's long-term value. As adoption grows and Bitcoin's market cap expands, Saylor predicts that volatility will naturally decrease. He draws comparisons to other early-stage assets and companies that also experienced high volatility before reaching stability. Amazon, for example, saw massive price swings in its early years, but eventually grew into one of the most stable tech giants in the world. Saylor also points out that Bitcoin's volatility is relative. In economies with hyperinflation or economic instability, Bitcoin's volatility may actually be less extreme than that of the local currency. For people in countries with unreliable financial systems, Bitcoin's perceived stability can be a lifeline. Saylor argues that as more people understand Bitcoin's resilience compared to unstable fiat currencies, they will view it as a better alternative. He believes that over time, as Bitcoin reaches a larger market cap, it will mature into a more stable asset. This stability will come from widespread adoption, higher trading volume, and the entry of large-scale investors who bring liquidity to the market. For Saylor, volatility isn't a flaw. It's simply a stage in Bitcoin's evolution. He calls it the price of progress, a temporary phase as Bitcoin matures and solidifies its role as a global store of value. The regulatory landscape, obstacle or opportunity. One of the key challenges on Bitcoin's road to $1 million is the regulatory landscape. Around the world, governments and financial regulators are still debating how to classify, regulate, and tax Bitcoin. Some countries, like El Salvador, have fully embraced Bitcoin as legal tender. Others, like China, have imposed strict restrictions on its use in trading. Saylor recognizes that regulation is a complex factor in Bitcoin's growth story, but he views it as both a challenge and an opportunity. In Saylor's view, regulation provides legitimacy. He believes that once a clear regulatory framework is in place, institutional investors will feel more comfortable entering the market. Many large financial institutions are hesitant to invest in Bitcoin due to the regulatory uncertainty surrounding it. Saylor argues that clear and balanced regulations will actually encourage institutional adoption by reducing the risks associated with Bitcoin investments. However, Saylor warns that over-regulation could stifle Bitcoin's growth. He advocates for a balanced approach that protects investors without hindering innovation. In his view, governments should focus on transparency and consumer protection while allowing Bitcoin's technology to flourish. Saylor believes that heavy-handed regulations could drive Bitcoin activity underground, which would be counterproductive for both governments and investors. Ultimately, Saylor is optimistic about the regulatory landscape. He points out that many countries are adopting more open-minded approaches to cryptocurrency, recognizing its potential for financial innovation. The United States, for example, has taken steps to regulate cryptocurrency exchanges, making it easier for Americans to buy, sell, and hold Bitcoin. Saylor believes that as Bitcoin becomes more widely accepted, governments will find ways to integrate it into the financial system without compromising its core principles of decentralization and security. A hedge against the unpredictable future. At the heart of Saylor's vision for Bitcoin lies a deep concern about the global financial system. He sees Bitcoin as a hedge against an unpredictable economic future. With rising national debts, the increasing frequency of economic crises, and the growing influence of central banks, Saylor believes that traditional currencies are becoming increasingly unreliable. He sees Bitcoin as a safeguard, a way to protect wealth in the face of potential economic instability. Saylor is particularly critical of the modern monetary policy. Central banks around the world have implemented policies that he views as unsustainable, from low interest rates to quantitative easing. In his view, these policies create artificial growth in the economy while fueling inflation and increasing the risk of economic collapse. Saylor believes that by holding Bitcoin, individuals and companies can shield themselves from the effects of these policies. In Saylor's analysis, Bitcoin isn't just a financial asset, it's a form of monetary energy. He describes it as a way to store economic value over time and across space, free from government interference or manipulation. To Saylor, Bitcoin represents freedom. Freedom from inflation, from monetary debasement, and from the risks associated with traditional fiat currencies. He sees it as a tool for preserving personal and corporate wealth, especially in uncertain times. Bitcoin, according to Saylor, offers a level of security that traditional assets cannot. Stocks, bonds, and real estate are all tied to the performance of the economy and influenced by government policies. But Bitcoin exists independently of these factors. It operates on a decentralized network, making it immune to government control and resilient in times of crisis. For Saylor, this resilience is what makes Bitcoin the ultimate hedge. Long-term vision, Bitcoin as a global store of value. Saylor's long-term vision for Bitcoin is nothing short of revolutionary. He sees Bitcoin as a global store of value, a digital asset that transcends national borders and operates outside the traditional financial system. In his view, Bitcoin has the potential to replace gold, real estate, and even government bonds as the preferred store of value for individuals and institutions worldwide. Saylor argues that Bitcoin's unique properties make it ideal for this role. Unlike physical assets, Bitcoin is easily transferable. It can be sent across the globe in minutes without the need for intermediaries or costly transactions. This makes Bitcoin far more efficient than traditional assets, which often require complex processes to transfer ownership. He believes that as Bitcoin becomes more widely understood, people will increasingly turn to it as a store of value. This shift, he predicts, will happen gradually as people come to see Bitcoin as a reliable asset that is immune to inflation, government intervention, and market manipulation. Saylor envisions a world where people hold Bitcoin not just as an investment, but as a way to secure their wealth and protect it from economic uncertainties. Saylor sees Bitcoin as the beginning of a new financial era. He argues that in the same way that the internet changed the way we communicate, Bitcoin will change the way we view and store value. In his vision, Bitcoin isn't just a technology, it's a philosophy, a belief in the power of decentralization and the right to control one's own wealth. For Saylor, Bitcoin represents a paradigm shift, a movement toward financial sovereignty and independence. Michael Saylor's legacy and the future of Bitcoin. Michael Saylor's journey with Bitcoin is a testament to his vision, his belief in technological progress, and his conviction in Bitcoin's role in reshaping the financial world. He has invested billions of dollars, faced criticism, and inspired countless people to take a closer look at this groundbreaking technology. Whether or not Bitcoin reaches $1 million or $10 million per coin, Saylor's advocacy has undeniably changed the conversation around digital currency. He has shown that Bitcoin isn't just a speculative asset, it's a potential cornerstone for a new kind of financial security. Through his bold moves, Michael Saylor has challenged the traditional understanding of money and opened up a global discussion on the role of decentralized finance in a centralized world. His legacy may well be that of a visionary who recognized the value of Bitcoin long before it achieved mainstream acceptance. Whether Bitcoin reaches $1 million, $10 million, or levels beyond our imagination, one thing is clear: it has sparked a financial revolution.
More scarce. When people lose their keys, there's less Bitcoin, not more, and it's mobile, and it's portable, and it's fungible, and it passes what I call the Bernard Arnault test, which is if you want to make a good investment, you should buy something scarce and desirable.
Saylor's journey is a powerful reminder of how new ideas can disrupt established norms, and how bold thinking can lead to transformative change. The question is no longer just, can Bitcoin reach $1 million or $10 million? But what will our financial world look like when it does? As more people and institutions adopt Bitcoin and its transformative potential unfolds, we may find ourselves witnessing the birth of a new monetary system, one that defies borders, transcends governments, and empowers individuals to reclaim control over their wealth. Thank you for joining us in this exploration of Bitcoin's future, Michael Saylor's vision, and the revolutionary potential of digital currency. The story of Bitcoin is far from over, and the possibilities are as limitless as human imagination.